Welcome, everybody. The market is slowing down a little bit, slowing these spinning wheels, if you will, today after what has been a very positive week of trading. But as you can see there, the S&P is trading a few points higher. It is in the green. But is there a reason for the holding pattern that we're seeing or just holiday doldrums? Let's get a read on what's happening from market watchers Phil Blancato and Michelle Schneider. Good to see you both. Phil, I'm going to go ahead and start with you. Just ask you sort of what you think you're seeing in the market today. Obviously, the volumes are light. We're going into New Year's. So, it stands to reason that investors may be a little cautious.
Yeah, for sure. You've had so much gain this year. You're looking at record highs again. Folks have probably taken some of their profits already. Most money managers like myself will wait for an opportunity in the last day or the second to last day to reinvest some excess cash. This is very normal. There's nothing spooky in the market. Even Omicron seems to be a non-event. So here's where you look for an opportunity for something that might have sold off more than you expected, and you take a stab at it because it's cheap. But you don't want to come in with a lot of volume because you could get hurt when volumes are light.
And of course, investors are sitting back and they're thinking about what they're going to do in the future, how they're going to position themselves in 2022, Michelle. And it's interesting because technology was, a huge runaway sector this year, providing good gains for many investors. But if 2021 ended today, the NASDAQ would actually underperform the S&P 500 for the first time in 5 years. We saw a lot of tech outside the FANG names, and that's what I was talking about, get hammered this year. So the question, of course, is this a deeper issue, a one-time thing? Your thoughts?
Well, certainly we know that a lot of the tech stocks are going to be interest rate sensitive. So it's not surprising to see with projections of possible rate rises next year for tech to be a little bit more cautious than, say, the S&P 500. But even that is a little bit beyond what we see because the S&P 500 has a lot of the FANG stocks in it, which are really the drivers. 27% of why the S&P is up is because of Apple and Google and Facebook and NVIDIA and Microsoft. So it could be that value will start to outperform some of these big growth tech stocks in 2022. But yeah, as we're looking out, we're really seeing the year end telling an interesting story in that retail, particularly consumer discretionary retail, manufacturing, and industrial, as seen through the eyes of the Russell 2000, are in a holding pattern, while transportation is getting closer to its all-time high. So really, I think it behooves people to be just a little bit more patient and see what patterns emerge, particularly in those areas as we go into 2022.
Okay, and one stock everybody is always watching, Phil, is Apple, of course. And there's a really interesting trend here because it's handing out huge bonuses to keep some of its top engineers from going to Facebook, parent company Meta, of course, which has been trying to poach talent. They're in a race, if you will, to try to win the metaverse. Who do you think is going to win?
I don't think there's a winning of the metaverse and the enigma that is Apple. They've been brilliant at staying ahead of the curve, and I'm sure they're doing that this time too. But the metaverse is a whole new paradigm. The opportunity to bring internet to a different way to so many new people. I think there's always going to be opportunity for competition. That's the beauty of our system. I think Apple leads the way. I think everyone else is going to have to catch up with them because they really are ahead of the pack already. But it is in this new thing that we need to learn about. Well, just think about buying real estate in the metaverse to advertise on. There's so many tentacles to it. It's not about winners and losers. It's about Apple staying ahead of the curve. And that's why they're a $3 trillion company. That's why a stock that still leads the S&P and is driving the markets higher most of the year. So I think they're the winner, but there's going to be lots of winners in the metaverse.
All right, Michelle, final word to you. I saw a board before with some of your top picks on it. What would you say is the one pick you're recommending for 2022, your favorite?
Well, right now, my favorite still stands as Mountain Pass because of the rare earth minerals. I mean, I have many, many stocks I'm looking at, and of course, that spans the sectors. But as far as growth potential, I see that as a potential double because it's affected by the EV space, which has been strong, could get stronger. The whole alt energy space, is particularly if oil goes up stronger, well, then we'll get some more follow through in the alt energy, which is right now been behind the curve in terms of oil. So Mountain Pass, great company, biggest miner in the Western Hemisphere. And with China doing mineral watch for rare earths, this is our best competition as far as getting ahead of the curve here in the United States.
Got it. Phil, Michelle, good to see you both. Happy New Year to you both as well.
Happy New Year.
All right. Moving
Here.
on, the U.S.